Hello, everybody, and welcome back to another episode of Subject Crypto. Today, we got a big thing to talk about, and that is investing. More specifically, kind of in general, but also how this impacts us in 2020. So, without further ado, I am Ethan Peterson, your host of Subject Crypto, and let's jump right in to the big stuff. What is money? That's the big question here. What is money? Why are we all subject to this thing? And it controls our daily life just so dramatically. It's the difference between having a big house and being able to put food on your plate. It is such a touchy subject for a lot of people. But what is it? Well, at its core essence, it's a medium in which two parties agree have value. It's a thing that between two people, it's just something, and they both agree that it has value. And they can pass it from one person to another in exchange for something of equal value. And that's kind of where it becomes also a unit of measure. It's a way that people can quantify a value of a specific good or service. But it also services as a store of value. So if you have more than you're spending, you can just hold on to them and they preserve your value, which you earn either passively or aggressively through working, and which means essentially that you have exchanged time for value, and now you have value, and you can store that through money. So that is what money is. Throughout history, it's had different forms, but right now, money, our US dollar, is a piece of paper that the government says this has value, and now all the people agree that it has value. So when I go to the store, I think my money has value. The store thinks the money has value. So I can give them the money and they will give me products of equal value. At least what they priced it as. So that is what money is. We can go way more in depth on how we got to this position, but I don't think we're going to touch base on that too much. There was a time when it was backed by stuff, more specifically gold, but that complicates everything so much further in terms of me explaining it, and I think that'll be in the future, where I'll touch base more on those things. But moving forward, who is in control of the money? The government, kind of, but mainly the Fed. The Fed was created to control the amount of money. I believe it was right after the Great Depression that they were like, okay, we need something in here we need just some entity out there controlling the amount of money that's out there, controlling something, controlling. They needed controlled. And so basically the Fed is the central bank for the central banks. So every bank in America and some across the seas, and this is getting more into economics, but so I'm going to keep it a little bit more simple. The banks get money from the Fed. The Fed loans the central banks money, and the central banks loan you money in exchange for more money. And that is kind of one way that it's controlled. The other way it's controlled is kind of what we've seen here recently, is that the governments, or our government in this case, printed or signed a bill for the stimulus checks and bailing out corporations of $3 trillion, adding $3 trillion into the money supply. And this is a big deal, and I'll talk about that either in the next slide or then the one after that. I'm not sure the exact order, but so we have the governments who can pass bills, and then the Fed prints the money, and then there's also monetary policy that happens through the Fed where they participate in quantitative easing, which is basically just purchasing up toxic assets and adding to their personal balance sheet. There's a few other things that they can do also. They can manipulate the interest rate, and their interest rate is different than the bank's interest rate. The Fed has an interest rate that moves like 0.001% at a time. And then those are like big numbers. Like when the Fed moves the interest rate, something's going down. And especially if it's not going up. Because up is expected and down is not. Down is when something bad is happening. So that is why it is a big deal when you hear in the news that the Fed dropped 25 basis points or 250 basis points or something along those lines. It's a big deal. The economy is considered going well when interest rates continue going up, because that means that the demand for the money is increasing. People want the money, people are spending the money, and they're willing to pay a little bit more for it to participate in the economy. And so that is what growth is. So now, when governments come through and they issue the stimulus check because no one's spending any money, we get to the next topic, which is what happens to the money. What happens when money's added to the system? What happens when you take out a loan? Well, when you take out a loan, there's not really money there. Someone else deposited $10, and then you're coming out here seeking $100, and that works out because the bank only needs to have $10 for every $100. It's the reserve ratio. So they issue money that's not real or doesn't exist yet, and then they make it exist through credit. And this increases inflation over time, which is basically the devaluation of goods compared to, it's the devaluation of money and an increase in the value of the goods. So I said that a little bit backwards in the beginning, but that is what it is. Money becoming worth less, yet goods becoming worth more. So, through business management, businesses see the inflation, they know what's happening, they push it a little bit further. And not only, so basically, without getting too into it, money becomes worth less and less over time. Because more money is added to the system, things become more expensive, and the core essence being the central banks in the current way that they do their system. So, what can we do about this? What can we do to impact, to affect, to combat the amount of inflation that we are subject to? And a lot of people don't know. They hear the word inflation, they know it's bad, but they don't know exactly why it's bad. And it's bad because everything around you becomes more and more expensive, but your money has the same number in the bank. You still got $1,000 in the bank, but everything around you has become what you would normally buy for $10 is now worth $11, $12, $15 because of inflation. And it's a money problem. It's a banking system problem. And that's why we're here today. Because I want to inform people. I want you guys to know. I want everyone to know that this is not the system that we need. So, what can you do? Keep as little amount of your wealth in cash as possible. The Fed strives to create 2% inflation every year. That means every dollar of buying power that you had in the past, the next year it's going to be worth 98 cents in buying power. But on your dollar, it's not going to say 98 cents. It's still going to say $1. So that's why things become more expensive and the money becomes worth a little bit less. And that's what buying power is. So I'm not a financial advisor, but this is what the smart money, this is what the rich people do to keep their money working for them. So it's up to you guys to say how much of your money you're going to keep in the bank or keep in a safe and how much you're going to invest, because everybody's situation is different. And frankly, I'm not good enough to tell anybody what exactly they should do with it. And I'm also not certified. So that's why we're not having that conversation. I'm just telling you that investing is the way to combat this. And there's a variety of things that you can invest in. You can invest in stocks, which are just a share of a company, which is just equity. You're just buying equity of a company, and then based on that evaluation and how they're doing, it either increases or decreases depending on, well, supposedly how the business is doing, but currently that's not how it is at all. It's just it doesn't make any sense, and we'll get into that a little bit later. Commodities, you can invest in those, which is just metals. It's like gold if you want to go and buy some gold or some silver, and then you just have those, and they appreciate in value because the dollar becomes worth less and less over time. You can invest in bonds, which is basically a loan, but from you. So there's government loans, or not loans, there's government bonds, there's corporate bonds, and basically what they do is they'll say, hey, you can buy our bond for $1 million and we'll pay you 9%, which would be really good. We'll pay you 9% over 10 or 30 years. And then, in 30 years when it matures, you have a yield of some sort. So, yeah, it's basically a loan, but it's not, they don't call it a loan. You can invest in mutual funds also, which is it's a very safe way to park your money. It's essentially you going to a firm, and then you don't have to physically go to a firm. They have them online. Most of these things are online now, as well as at a firm. So you go, I have a $50 I want to invest. And then you open up an account, you drop your money in, and everybody else at that firm who's invested money has the same pool of money, but you kind of have a share. It's kind of like a stock, but it's like a bunch of different stocks put together. And they invest in all of these things listed here. And they control all of that for you. And then everything is divided, according to how much money you put in. So you don't have to think about anything. You don't have to worry about making the trades or anything like that. They do all that work for you. They pick what things to invest in. And yeah, there's a bunch of different mutual funds. There's a bunch of different ones, and they all focus on different things. There's hedge funds, which is basically just like a mutual fund, but they specialize more in things that would do well when times are doing bad. Another word is like a counter bet. So I'm betting that this stock's going to go up, but just in case, I have my hedge fund, my counter bet. So anyways, going on, I hope that's a good explanation of mutual funds. It's basically just mutual. It's everybody putting their money in together, and then some firm controls it, and then the wealth that is generated is divided among everybody in terms of how many shares they have. So, Forex, foreign exchange. This is when you invest in other currencies that aren't your own. Basically, they move very small percentages, because they kind of clash with each other. It's an interesting one, and honestly, you can make a whole video on it. But it's basically, if I just wanted to sell my US dollars for Swiss francs, and because I think that their money is going to be worth more than our money. And that's basically what foreign exchange is. Or you can do the opposite, and you can short another currency. It's a lot. It's insane. It's something. But anyways, moving on. Futures. Futures is a little bit more complex. This is probably going to be one of the more complex ones. And it's basically you buying a contract of some commodity or something like that. Or corn, or food, lumber, anything like that. There's a bunch of them. And you're basically just kind of hoping that the price when the contract expires is going to be more than how much you paid for the contract. And that also could be an entire video on its own. But basically that's what it is. It's just a contract you buy at a price, and then they mature on the third Friday of every month, and then it's kind of at that point where are you in the money or are you out of the money? And you can trade them with other people throughout that time period. But when the contract expires, that's when the money is issued for that contract. So lastly, and the reason why I'm here today and the reason why you're here today, hopefully, is for cryptocurrency. Now this disrupts everything. This disrupts the entire monetary system that we have created. It disrupts the banks. It disrupts everything, because the way that the money is valued is now in a program, typically uncontrolled by a body, but yet multiple bodies. I think let's okay. So without going in too deep about what a cryptocurrency is, these are the benefits. You can become your own bank. You have control of your own money. You don't have to worry about it, burning up in a fire if you follow the right safety things, the security measures. If you can buy like a little metal card, and you can engrave your password, essentially is what it is, and then you just log into a computer and then your money's there. Typically, they're all oriented towards building wealth for the holder, so they're anti-inflationary, and since nobody can control them, governments can make them illegal, but it doesn't stop the flow of transactions. So there's no censorship. You'd think I'd be able to talk by the end of this video, but it's actually the opposite. So anyways, cryptocurrencies have been named the best investment in the last decade. They've outperformed everybody. They've outperformed tech sectors, tech giants, gold, the S&P 500, the NASDAQ, the Dow Jones, all of them. How long could it go on? Quite a while, as it gains more popularity, because it's not even that people really want to invest in it, it's that people want to opt out of the current system in which inflation has them tied down, where banks have this control in which they can just deny your transactions, where it takes weeks to get money across borders, where these issues, and just opting out of that increases the price of these currencies. And I can't really stress these points enough. I will definitely make another video describing in depth what Bitcoin and what other cryptocurrencies really are at their essence, at their programmed level, how they work, what drives them, all of that. But if you really want to opt out of the banks, if you want to opt out of inflation, if you want to opt out on restrictions, censorship, we are in the midst of a revolution to create the next level of currency. It went from shells way back in the day to gold coins to paper-backed money, or gold-backed money called paperbacks, and now we're just at this point in time where money is just a piece of paper. But the next step, perhaps, is a digital, non-controlled money. A global currency, perhaps, where everybody can opt into that system and opt out of their current government system. Because really, realistically, no entity really knows how to control the money, what they should do in current situations. It's a daunting task, and it comes at the expense of us. It comes at the expense of how many things I'm going to be able to buy, how much food am I going to be able to put on the table, how much rent it's going to cost in the future, how much houses are going to cost. All of these things increase in price. And so this is a way out. And you can't, I wouldn't say you just dump all your money into it, because it still is fairly new. And and then also you wouldn't be able to pay for all of your bills and stuff, because there are a lot of people that accept it, but I'm guessing, your internet provider is not going to accept Bitcoin or anything like that, and your landlord's probably not going to want it, grocery stores, probably not. But once those entities get on board, it's a go. It's a go. So there's one thing that I want to show you guys outside of the PowerPoint, and that is a couple charts. So NASDAQ just the other day, a couple weeks ago, I guess, topped out at its all-time high of 135.63 ish. I guess I could just hover over this and it'll tell you 135.51. So NASDAQ, which is just like, it's like a bigger Dow. It's got more, there's more companies in it, they're less valuable, but the Dow Jones is the 30 most, I forget exactly how they word it, but it's like the 30 biggest in their industry or something along those lines. So the Dow is not doing as well as the NASDAQ because, we topped out over here and we still haven't made it back up there yet. And this kind of triangle that it's forming ultimately is not a good one. I'll go over probably some trading patterns and trading strategies in the future, but this is not looking well. The NASDAQ, also, this is not a good pattern, although things could happen. More stimulus, governments intervening, all of that stuff, and that's kind of what has led to this, instead of having a prolonged recession in which, maybe we come up here and then just trickle down a little bit. But now we're going up, continued, and it is definitely not natural. I'll tell you that. The last chart that I really want to touch base on here is, this is a chart of the dollar, the US dollar index. Today, the US dollar, in terms of this index, is worth 92 cents, almost 93 cents, but it's 92 cents. And that is a significant amount. That is almost 10%, in which it was, we got 8% down here. We're sitting at just almost 7%. Just a little bit above 7% of what it normally is. This is when a dollar is a dollar, or typically whenever they decided that the dollar was a dollar in terms of the index. So there was a point, when it's 3, almost 4 cents above being a dollar, but since the stimulus, this was right about that stimulus time, where the dollar just was like, ooh, ooh, ooh. Stimulus checks came out, $3 trillion printed. $3 trillion. And it's not $3 trillion printed. Look at this. Let's just look at this real quick. 4% goes down 4 and some pennies. I can't even say pennies because that's what we're talking about. But 4%. The dollar's worth 4% less now because of a $3 trillion stimulus check, and or stimulus bill. We didn't get that check, and then just throughout the rest of the fallout has gone down an additional 4%. So we're chilling at a dollar being 92, almost 93 cents. Will this continue down? Probably, given current economic times. We're sitting at this kind of support range in which we did have these problems in 2016, 2015 as well. But what really hit, this was right around that time where, this was right before the Dow Jones collapsed in 2018, and then it took before the dollar became a dollar again. It took 2 years. It took 2 years for the dollar to become a dollar, just to have some like this pattern doesn't even exist in anything. This is just a this was the initial scare. This was before any stimulus. This was just businesses starting to shut down because of the coronavirus just getting here. And then for whatever reason it shoots up $1.02, $1.03, just to have this continued debate over, are we going to get a stimulus? The stimulus comes out, money's worth less. Money's worth less. But if you, for instance, bought Bitcoin. So we did have this initial scare. This was about that same time where the let's see here, May. We're just gonna from May 22nd. Okay, let's go look at that on the chart. February, March, April, and May. Okay. May 22nd. Boom. This chart looks almost the opposite of the other one. Because there's a finite supply. There's only so much. Like, you can't just keep making more and more and more. Yes, we are adding more into the system through mining, but it's a finite amount, inevitably, eventually. So I just wanted to kind of touch base on these things real quick. That's everything I wanted to talk about. I hope everybody found some valuable information. I got a lot of more information in my brain that I've been gathering throughout the years. Go ahead and check me out on Twitter if you want. I follow a lot of people who know a lot about the space. I don't know why Tone Vase is talking about. Oh, that is pretty funny, actually. Yeah, I follow a lot of people in the space. A lot of it's really funny. I like adding humor into the space just because it's so serious, and sometimes you just gotta laugh about it. You go, really? Did I really just put $5,000 into this and then it dropped 20%? I'm fine with it because ultimately it's gonna be worth more. You just gotta laugh. Sometimes you just laugh. So, that being said, hopefully next time, guys, I will have a webcam. Probably not, because with the virus, everybody's been buying them, and I don't have them anymore. I don't have them. Nobody has them. Best Buy doesn't have them. Walmart, nobody's got them. So, with that being said, thank you all for tuning in, and I hope you have a wonderful day. Peace out.